Good morning, everybody. What's up? Today is Wednesday, December 14th. I was about to say 16th for who knows what reason, but today is Wednesday, December 14th. And it's a very important day in the market, yet again, back to back, because as we know, at 2 o'clock, Jerome Powell will be jumping on the microphone with his comrades. We'll be getting the FOMC Fed funds rate statement, the rate statement, economic projections, and the Q&A press conference to notoriously offer some market volatility here, right? Q&A, usually someone throws something at them that is, doesn't necessarily have a beautiful canned response for, and, the market goes, oh, whoa, what was that all about? And we'll see what goes from there. So anyways, really interesting day yet again. There will be some trades to be had prior to the 2 p.m. announcement of the rate hike, as well as the 2:30 press conference, which is why today's video is all about the levels to be watching ahead of the rate hike, okay? So we know that we're expecting a 50 basis point rate hike as and if that's what Jerome Powell gives us in the market. I imagine that everything's all fine, and we, maybe there's some volatility, but it probably settles out. If the volatility does something like this, it's lower first and then higher, and then it comes in a little bit. If we get the 50 basis point rate hike as everybody is imagining, I bet we kind of settle out net neutral, and then it's the Q&A at 2:30, which will kind of offer again another either one of these, and then here or possibly down here. We don't know. Okay, we don't know. We're not positioning early for that. We're trading ahead of the announcement, and then personally, I'll be flat at 2 p.m. I will be absolutely flat here. I'm not holding anything through the announcement. It doesn't make sense. Just like I was flat for CPI, I'll be flat for Jerome Powell, and we'll go from there. All right. So That's the economic calendar. In terms of stock-specific headlines this morning, we're getting more crypto turbulence here with CZ and his Binance, essentially deposits that he keeps tweeting about. Net withdrawals, net deposits, this, that, the other thing, right? It's kind of craziness out there in the crypto world, and it continues to do so. So we'll just put that on the back burner there. Remember that SBF was arrested yesterday. That was the major headline, and I'm imagining that there's just more uncertainty and volatility in the future in the crypto world. Excuse me, with all these things going on. Everything's fine. No. Here's everything the Federal Reserve is expected to do on Wednesday. It's the 50 basis point rate hike. Delta expects 2023 earnings to nearly double thanks to a robust travel demand, sort of a rebound there. I don't know about that. I think that based on what we're seeing from the banks and the credit card reporting, consumers don't really have much, excess spending here. Remember that savings have essentially gone to zero, the savings rate, that is. I don't know that there's just going to be robust travel demand in 2023. Don't get me wrong. People always want to travel, but it's all about the capability of actually traveling. Bank of America downgrades Caesars, Penn Entertainment, as the gaming industry faces a growth slowdown. So a downgrade out there this morning. Mortgage demand inches higher as interest rates move lower. So, just ever so slightly bumping higher. That's what I would take away from the inches implication there. So it's not great, but it's a step in the right direction in terms of indicating demand for housing, right? Keeping that housing market afloat. We saw that in the XLRE last night. Biggest movers pre-market, Delta, Tesla, as well as the mRNA stock, which we were looking at yesterday as well. What else? The Arctic is getting warmer and stormier, and ship traffic is increasing as ice melts. Interesting. I don't know what that means for a stock-specific perspective, but interesting nonetheless. Nuclear power sort of coming in here. What else? Morocco airline cancels World Cup fans' flights, citing Qatar's restrictions. Interesting. Not great. What else? Futures are muted as investors await the FOMC decision. Makes sense. Another downgrade from Bank of America, handing them out like candy this morning. Downgrade to Best Buy says the stock could fall nearly 20% as inflation hurts spending, and that sort of aligns more along the theory with what we said about Delta and their travel theory. Inflation is totally eating up spending. Savings have gone close to zero. Lots of credit being taken out. Not a good look for travel, I would say. Dorsey admitting mistakes at Twitter. Site still has problems. What else? Stock-specific stuff. Plug Power, right? If the thumbnail image is indeed what the Pro article is in reference to, saying that there's 80% upside potential from UBS on Plug Power. Interesting. I don't know. Someone out there in the chat could probably tell us if Plug is specific to one-stop hydrogen, right? So someone I'm sure out there knows the research, but I personally don't. If it's Plug Power, then maybe we can take a look at that stock. Who knows? And then as we get down lower, nothing else. It's really just more about that crypto FTX nonsense. So that's it. Couple of downgrades. I'm still seeing some concerns from a consumer spending perspective, so I don't agree with this Delta headline here. And that's that. Let's take a look at the earnings calendar just to know what's on the radar for today. Wednesday, of course, before the open, nothing impressive here. I would not be focusing on Weber. Maybe you did some grilling in the summer, but probably not your primary focus in the winter. Lennar, maybe that's a mover, after not a market mover, but a decent mover after the close. That's something that we sent out in the weekly watch list newsletter, so that could have some impact there if you were watching that from Sunday's email, right? After the close tomorrow, Adobe, and that's really it for the week. Let's take a look now at our good old bread and butter, the ES futures. Here we go. This is a 4-hour time frame chart. We will dive into the 4-hour analysis momentarily, but we've got to see who's here in the chat. I believe up first was actually Nancy this morning. Yeah, look at that. Nancy H., good morning. Nice to see you. INF, I don't know if you caught the shout out last night in the video. Very subtle. I'll have to look back at the comments. I haven't done that yet. But good to see you as well. Sai, Mona Makes More, Chloe, Mohammed, Ryan Speed, Wesley, good morning. I know you mentioned last night that you were able to make the stream, so happy to see you here. About Billions, Ivan. We've got Daniel. Roger Tutt, Jay Hicks, Niall, Elliott. We've got Crypto Vader, Mahogany Beats, Official, Ross, nice to see you. We've got Live Better, Fraser, Luis. We've got Pimp Hop, Mickey, Stephen V, Ike Wells, Almost Davy Day Trader, Johnny Whitaker, May, Jay with Gold Cash Bag, Leaf Floating on a Lake, Johnny Davis. Who else? Davey, Kevin Weston. We've got Inza, INF again, Gregory Rulo. Who else? G-Money, Stevie J. Excuse me. Apologies. Joel Clark, just looking for some green names now here, folks. Ty is here. Ramona is here. Empower Lord Trader. Who else? Sharon J, Nick Farrell, John Cardozo. We've got the Sandman. Sharath is here. Sammy Campbell, Raz, Nick Farrell. I think we got you. And that's going to do it for green names. So remember, if you want to shout out, just get here sooner. Say something sooner in the chat, and it's more likely. But diving into the 4-hour time frame chart in the ES, very, very interesting price action here. And we sort of started to look at this in last night's video. But the most important part about this is the fact that from here to here, we finally produced an equal high on the 4-hour, it's EH, on the 4-hour and daily time frame chart, which is actually keeping the daily trend neutral, the 4-hour trend neutral up here. We've got kind of a balance range, right? You could call lows, you could call lows, you could call highs, and highs up here as well. So we're neutral until proven otherwise. We're in the midpoint of this overall range. Remember that what we say about the midpoint, right? What do we say about the midpoint here? You don't really have an edge. Your edge literally exists at the edge of the range, breakout, mean reversion. Same thing down here, mean reversion or a breakdown. Currently, just don't have much going on here in the midpoint. So with that said, I think we should take a fairly neutral stance in the market from a 4-hour perspective ahead of this FOMC. And I do think that at 2 p.m., the market could easily move on news to the bottom or to the top of this overall range. We did it yesterday on CPI. I don't see the reason why we couldn't do it again on some FOMC volatility. Let's take a look at the hourly time frame chart to see what other nuanced types of signals and indications we can pick up from the chart. Obviously, we had a big gap fill reversal, we had a couple of things. We had a gap fill first, and then we had a small gap fill reversal is what I should say, off of the Monday high here on yesterday's session. So overall, I do think that this took some significant selling pressure, but the fact that we reversed right off of the gap close area, again, we went into detail on this last night in the CPI breakdown video. This strikes me as nuanced short-term momentum type trading. This does not strike me as longer-term traders getting active in the market looking for a big new money short all the way down to, like, I don't know, let's just call it 3,000, right? This is not indicative of that whatsoever. Only short-term momentum type traders would lighten the load on a gap fill, and only short-term momentum type traders would start looking at gap fill reversals for long trades here. So this is, again, momentum style stuff here. Until proven otherwise, away from the midpoint of this range. Over the top or under the bottom, I think it's a patience play from these higher time frame perspectives. Now, don't get me wrong. In the pre-market, we are getting a lower high in the overnight session from here to here. And we're also rejecting underneath this zone that we were talking about yesterday around the value area high as well from yesterday's session. So that to me strikes me as slightly bearish. And if we look at the market profile, let's take a look over here. This is the Russell. Let's go to the ES. The ES is completely accepting in the overnight, at least, in the lower distribution from yesterday. Remember what we said in last night's video? Bearish if accepting in the lower distribution, neutral in the middle, and a little bit more bullish in the upper. But you know where we're trading currently, it's this orange line right here. Definitely more bearish than bullish in the lower distribution around that point of control. It's going sideways, not really getting any lift into this upper, right? So with that being said, knowing that we've had the opportunity in the overnight to possibly do something a little bit more interesting and come into here, we didn't, and now the focus should be, all right, if we break down underneath the prior low of day off of this overnight lower high, so here, right, that level is roughly 40.25, 40.30, somewhere in the zone, right? If we crack down underneath that, we've got a spike from Monday to contend with. Look at the thin structure and the volume profile here. The market should move through that with some relative ease as opposed to extreme difficulty. And the target then would be the point of control from Monday, much closer to 39.90, all right, 39.90 down here, okay? So from a market profile perspective, we're learning some things here that are actually fairly, I don't want to say fairly bearish, but in the short term, bearish. In the larger picture, still fairly neutral, okay? So that's what I wanted to share with you about the market profile and the hourly chart. Remember, again, that we're just looking from here to here at this is a lower high. Crack of this gets us through this thin structure from the Monday session into the point of control, which is here, closer to that 39.90. So that's the similar look. That's the comparison here on the candle chart. All right. Time frame on the market profile is 30 minutes. Each period is 30 minutes. That's standard for market profile. Here is the 15-minute time frame chart of the ES. What do we see on the 15-minute chart? First of all, bear flag played out, beautifully rejecting that situation around the gray bar that we discussed yesterday. Remember that was 40.90. Hopefully, if you tuned into the stream, we were saying if we go here and put in a lower high underneath, we were looking for a breakdown, and that was ultimately the trade to take yesterday. A little bit skeptical of the down move over here, but regardless, this worked out. It was beautiful. It was perfect. Great. Trade complete. Next look is underneath the low of day here. All right, so area of focus for today's session, I know we have two things that are overlapping. It's the low of day as well as the value area low. What's the level? It's 40.26. I would just call it 40.26. All right, so 40.26 is your downside level for today's session. If we break 40.26, we know the deal. We're probably moving through Monday's rally down towards that 39.90 point of control in here. So 40.26 breakdown, possibly lower high underneath breakdown. I don't know how it's going to unfold, but underneath 40.26, if we can find a bearish setup, the target should be 39.90, as we just discussed from the market profile, which makes sense moving through and retracing this thin structure here. Also makes sense because we're opening in the lower distribution from yesterday. We're opening near this point of control, right? So that's what I would say about downside for the morning session. If we crack the prior low of day, 39.90 is your target. If we stay sideways in this overall range and we just chop around, it'll be very difficult to really do anything meaningful in the market. I don't really think that there's, we shouldn't have this big bull bias on this morning session for something that does this here. I think that'll be much more difficult to trade instead of the breakdown, right? I think more things are kind of stacked and aligned with a failure of the prior low of day for a, scalp ahead of, let me be very clear once again, this is all happening ahead of the 2 p.m. announcement from Jerome Powell and then the 2:30 press conference, right? These are looking at trades ahead of the market volatility. Again, just to be clear, I will be flat for both of these time frames and then, reevaluate if there's even something to do into the end of the day. I think the upside's more difficult than the downside earlier on, ahead of the news, right? And reason being is for all the reasons we've looked at so far, primarily opening in this lower distribution, overnight high kind of rejected right off of the support from here, right? So I think the downside looks a little bit more favorable on a break here, a lower high underneath, something that does this, 39.90 becomes the target. If we just chop around in here, we know that we're in value, right? We're in value, we're going sideways, market's kind of content. All right, maybe something's bullish on a higher low over the value area high. 40.90 is back in play, right? Recapturing the flag breakdown highs. But again, I'm not seeing it based on the current position of the market. It would seem more favorable that something like this happens. All right, enough of that. 3 questions. Let's stay on track here. Question number 1, where are we opening in relationship to the prior day's range? Here's the high. Here's the low. We're opening inside of range. That's a balanced indication. Whenever we get that, we ask question 1.5 as well, which is where are we opening in relationship to the value area? Of course, we're opening smack in the middle of the value area. Value area low is overlapping with your prior low of day. Another neutral and balanced indication. We're opening fairly close to the point of control as well, which is always an indication that the market's very content with where we're opening. No knee-jerk reactions, no shock and awe here on the open. Wouldn't be looking for early morning trade. I would wait for something to develop, namely some sort of trend that does this and gets interesting around that prior low of day and breaks us down out of the value area. Hopefully I've been very clear and hit that point home. Enough of that. Question number 2, where are we opening in relation? Opening towards maybe the upper edge of the lower third in the overnight. Maybe it's the midpoint of the overnight. Pretty sloppy here. Nothing really all that impressive. We're not opening smack on the overnight low. We're not opening smack on the overnight high. It's not really telling us a whole lot. Let's put a neutral to maybe slightward down arrow here. Slightward. That's not a word. Slightly down arrow here. Question number 3, last but certainly not least, what is the overnight inventory position? To do that, you just extrapolate the settlement, which is basically where we've drawn in this pseudo point of control level as well. How much time was spent above, how much time was spent below? Much more time spent above here than the small amount of time that was spent below, and some in here as well that's just being covered up by the line. So net long, but maybe only to the tune of, let's say, like 65% or something like that. Again, this is not really conducive, or it's not really as important to the morning analysis when question number 1 is telling us we're opening in range, especially opening in value area. So overall, patience seemingly will be the play here on the morning session. Sound check, in and out. Good from Australia. Refresh it. Refresh your browser. Refresh the browser. Refresh the browser. If sound issues I need to like put that up as a like as a I need to put that up as a like a permanent banner or something on the channel. Momentary lag, but seems like things have caught up. Maybe it was on YouTube's side. Maybe it was my Wi-Fi. I have no idea. But anyways, we're back in business. Hopefully everybody's tuned in here. We all good? We all good to move forward? All right, let's do it. All right. Refresh if sound issues. Okay. Anyways, the 3 questions are telling us patience here on the open. Can't be clear about that enough. Especially ahead of FOMC, I don't think that the market context really throughout the past 2 days has been an easy one to navigate. This was a fairly difficult trade to pull off unless you kind of know the deal about inverted hammers, the bear flag pattern, and the level that we were watching at 40.90. I mean, there's a great setup here to actually do the thing, but it definitely wasn't easy. Like in the face of a market move that was already lower 60 points or whatever it was, it's pretty tough to pull the trigger on a short and expect the market to make another 60-point run. All right, so anyways, the market's tough here. And I wouldn't blame you if you choose to execute patience and just say, you know what, I'm going to wait until after 2 o'clock after today's session and just see how the market settles out here. And we'll go after, we'll see what happens after that. Wow, my brain feels real foggy this morning. Terrible. I feel terrible. Feel terrible that it's not a clear presentation. Let me be clear about that. I feel like I'm repeating myself too much. Now I'm I'm vocalizing that it feels weird, which is never a good thing to do when you're presenting. All over. All right, we've talked about the ES. Let's take our poll, see what the chat seems to think. I feel fine from a sickness perspective. Don't get me wrong. It's all good. If the chat's bullish, if you think that the market's going to break out and do something impressive like this today, let's see a number 1 in the chat. If you are feeling more neutral, like we might just toy around in the value area and then who knows, something happens at 2 o'clock, let's see number 2 in the chat. Bears who sort of agree with me off the lower high and break down to the prior low of data 30.90. Let's see a number 3 in the chat. If you've got no idea what's going to unfold on today's session, a number 4 will do in the chat. That is A-OK. And we'll type in the official YouTube poll here as well. Start poll. What do we got? What do you think? Questions 1, bullish. 2, Newt. We'll add some options here and get 3 and 4 on the board. 3 is bearish, and then 4 is our ostrich. All right, it's out there. Official YouTube poll can be clicked if that is your prerogative. If you prefer not to type something into the chat, that is A-OK. Click on something in the poll results, and we should go with that. All right. Scrolling up here in the chat to see if we've got any concerning questions, comments, things of that nature. Terrible. The chat has gone from 600 people to 500 people. We're losing people. It seems like the channel's dying here. Very not so motivating. 488 people. Yeah, something's up. Something's up with the YouTube algorithm, man. Real discouraging past couple days, but whatever. We're here. We're just breaking down the markets. It is what it is. Let's see. Poll responses, questions, comments, concerns beforehand. Siege, good morning to you. Thanks for tuning in. Stargazer as well. What else? Stevie J, Nick Farrell, good morning. Jay Hicks says that it was cutting out. Hopefully we fixed that sound issue. Remember that if there is a sound issue, refresh F5. F5 key is your friend if you're getting sound issues. Right? Anyways, poll responses. We've got 2s and 1s flowing in early in the chat. Looks like we've got 1s and 2s, 1s and 2s, 1s and 2s. What else? A couple of 3s as we get lower through the list. 2s and 3s. Again, we're getting that classic switch up about halfway through. Remember that usually what happens with the chat is that we get a bunch of responses, and then about this many of them are all the same, and then this flips about halfway through, and that is happening with the 2s and 3s becoming more of a favorable or more high response rate as we go lower through the chat responses. Yeah, coffee's the cure. Probably, Brett. I haven't actually had a cup of coffee this morning. Maybe you nailed me. Maybe you got me there. Maybe I just need to go drink a cup of coffee and pick myself up. All right? Yeah, definitely fireworks around 2, 3 o'clock. Absolutely. All right. All right. All right. All right. All right. Cool. Let's just keep going here. Let's keep going here. Let's take a look at the NQ/NQ. What's up with the NASDAQ this morning? We know what the ES's deal is, kind of a little bit more of a bearish tone than bullish one as we head into the open here, but keeping an open mind after 2 o'clock. NQ is interesting, and again, we talked about this in last night's video. We talked about it yesterday. The move took us outside of the original balance here. We've got this other balance that had been forming here. Equal high was kind of in play, rejecting right up around these equal highs. We've got the equal lows in play as well. We're in the midpoint of this overall balance. Same idea, patience in the midpoint of a balance. You don't really have, you don't really have a statistical edge in here in the midpoint, right? It's I don't want to say 50-50 odds. We'll look at some clues that'll hopefully help us make better odds there. But, either end of the balance is really where things start to get much more interesting. So 11.6, 11.5, kind of down here and up towards the top, 12,250, that kind of area breaking the equal highs, right? That's the 4-hour. Let's take a look at the hourly chart, see what's going on from this perspective. Hourly chart, in terms of the most recent trend, if we look at this segment of price action here, it's definitely a little bit more bullish than the ES with some higher lows in play, obviously, some higher highs as well. Could this be a possible higher low? Maybe. What you would want to see is just a hold of the prior low of day. That is basically exactly conducive to what we just discussed in the ES as well. So let's go to the 15-minute time frame chart. We'll talk about the same thing. If we break down underneath the prior low of day, expect a rotation here a little bit lower through the thin structure from our Monday rally, right? So looking at the breakdown here, boom, lower highs underneath. This is kind of your interesting setup ahead of 2 p.m. and the announcement, right? This is kind of the target. This is the entry. 120, 110-ish point move to the downside available, depending on how it's played. To get there, right, it's also about a 100-point move to the downside, so 200 points on the NQ. Is it doable? Absolutely, in the face of volatility that we've been seeing like this. When 2 o'clock comes around, though, all bets are off. Could easily do something like this right in the opposite direction. So even, let me say this as well. This will be a bolt-on to the FOMC statement and just sort of the cautionary tale, right? Even if the bearish sort of skew that we've identified pre-market comes true, there's nothing saying that at 2 p.m. when the FOMC comes out, it can't go right back up to the high, right? So just because we do get some bearish activity here doesn't mean that it can't be erased from the FOMC, all right? Don't just think that the FOMC might bring us back here on a bullish look. It could very easily go all the way up to the prior high of day. And remember that the volatility will probably be so fast, so lightning quick, that you'll just get run over. If you're trying to put a stop loss in the market here, you may not get filled until here. You may not get filled until here. Really depends on how the liquidity gets pulled from the market ahead of that announcement. And it happens in like a tenth of a second, right? It's something that you will not be able to, as a human, participate in and avoid if you think that you're just going to use a stop loss, a hard stop in the market as it's going haywire here, potentially on 2 o'clock, right? So be mindful of that. I think the main, this is a learning week for probably many people in terms of recognizing that when market volatility gets like this, sometimes the best thing you can do is either step aside and just let the market do whatever it's going to do, or be very tactful with your trades. Remember how yesterday, and I think the ES it's just a beautiful example of this. If we look at the ES, not to toot our own horn or do whatever, but we quite literally said, there's probably not much to do on the open. We know that gap rules will be in play, but you should probably manage your expectations. I would be much more interested in a bounce off of 90 or a breakdown underneath for a lower high. Remember, if you were executing patience, if you were managing those expectations, you didn't care about this sell happening early in the morning. You were only interested around the level, and it did work. So patience did pay. All right. So again, not to toot our own horns, and of course, you never nail the full trade. We took profits somewhere in here, or at least I did. I don't know about you guys. But regardless, excuse me, regardless of that, this is a lesson to not chase gap ups. It's a lesson to be patient on shorts, because even if you smacked it short on the open, I suppose the trade worked, but it's a bad habit to do. We didn't really have confirmation, especially after this attempt to get back to the open, right? Really was more choppy through here than anything else. That was a difficult first hour or 45-ish minutes of the market. Be patient. Be patient in market context like this. Do not necessarily get ahead of yourself and just, make all of these crazy assumptions about the market. It's got to do this on the open. I'm going to do this here. Wait for the confirmation. Wait for the confirmation. This is a learning week for, as I said, I'm sure a lot of people. about volatility and market context and environment and all of that nonsense. So I don't blame you if this is a difficult time in the market to be getting involved. If you just kind of say, I'm just not going to do anything. Not going to do anything here. I'm going to let the news come out. I'll see what happens on Thursday, maybe Friday. If nothing happens there, then we've got all next week to trade as well. All right. So, anyways, long-winded way of saying patience on the open. Still a suggestion here in the NQ. Opening in the lower distribution, just like the ES, tangled up around that point of control. We've got 3 distributions, just like in the ES as well. So distribution bear down here, neutral here, bullish a little bit higher up there in the bearish distribution. So again, favoring these kind of outcomes here for the breakdown like that. Bullish outcomes not really on the table. I suppose maybe a higher low over the overnight high to get to the value area high. That's maybe there, but I certainly wouldn't favor it. It wouldn't seem like a decent idea to me to be going long there. And again, I could be wrong. But based on what I can see in front of us, I think that this and then some sort of breakdown here is more of a favored look. This gets a little bit more difficult. Maybe a quick scalp in there if you want to step in and take out 20 points or something like that. Maybe that's doable, but we'll leave it at that in the NQ. All right, RTY. What's going on with the rut? Small caps. What's going on with the small caps 4-hour time frame chart? And then we'll, of course, keep drilling down. This is concerning. Made a very clear point of this, hopefully, in last night's episode of the CPI update video, right? If we look at this range, we had highs, equal highs. This rally produced a lower high from here to here. That's a concern. Big concern, kind of a big red flag in terms of market divergence from a different index perspective. Remember that small caps technically offer some sort of insight into risk appetite. And this, of course, is indicative of less risk appetite, which is, of course, bearish for equities. So with this lower high, I think that ties into the bearish narrative that we've been seeing so far with the price action and acceptance in the lower distributions. We did not, we did not on yesterday's low violate. So yesterday's low is still in line with the low of the balance here. So it's not all that bearish just yet. This is definitely starting to become bearish with the lower highs, but it's got to take out this low again. So prior low of day gets real interesting for a breakdown point. Let's go to the hourly time frame chart. It seems like the main levels we should be watching are just prior lows of day, right? Prior low of day here, if we crack that kind of on the table for 1810, that's moving through the thin structure from the Monday rally right here, right? So what other hourly clues can we see? This level is another key one. So overnight low might act as important as well. I would say it's still all about the prior low of day, but a precursor move would be a lower high underneath the overnight low is especially important coming from these prior rejections here, here, here. If we crack the overnight low, stay underneath it, it's kind of game on for those downside outcomes. As long as bear consolidation is taking place underneath 15-minute time frame chart, then we'll jump on over to that S&P chart here and look at the cash ETF equivalent. Russell on the 15 is very similar to everything else. Opening in range, opening in the value area. Value area low is overlapping with our low of day. Opening inside the midpoint of the overnight range, neutral until proven otherwise. I think bearish outcomes are probably favored. Again, accepting the overnight session inside of the lower distribution here. We just talked about lower highs underneath the overnight low being in play. So still more of a bearish tone inside of the Russell. This one is a little bit interesting on the rotation higher just because the value area high it's not actually at the structure here. It's not at the structure. So I would say the Russell may get interesting if we can take out 1865 for a 10-point move into the value area high. So if this kind of deal happens here, break, that might be interesting for a 10-point move in the rut, which kind of keeps us a little bit more neutral moving into the midpoint, the middle section of the range from yesterday. Right, so I would carry forward prior low of day 1835 and this possible breakout point at 1865 in the Russell. Those would be the two key areas. This keeps us bearish in the S&P and the Qs. This would say, okay, kind of more of that neutral outcome, maybe a little bit of lift ahead of FOMC in the NQ and ES. All right, so 1865, 1835, that's where you want to be from the Russell perspective. Let's take a look at our SPY here, and we'll bring up our pre-market charts. 30-minute time frame on the right, daily on the left, of course. Zooming in on the daily, again, just to reiterate, here's the balance area, here's the midpoint. That's kind of where we're opening on today's session. Wouldn't be aggressive, here or here. I think that opportunity, again, not to beat this dead horse, at the edges, be patient. All right, we know that. In terms of the levels to be watching, prior low of day, excuse me, prior low of day, the gap fill is nearly to the tick right off of 399. 399 here in the SPY is your downside level to be watching. That's your gatekeeper for a retracement, not to 394, but rather just to the breakout from the Monday session here. That is closer to 396.25. Maybe I'm just experiencing like burnout or something, man, because goodness, I feel like the words aren't coming out good, the whole 9 yards. Regardless, SPY, prior low of day, 399. Bullish, only on a recapture of maybe overnight high just to get to the breakout level from here. 406.34, top of the weekly expected move, looks a little bit more interesting. It's also the rejection trend line from the all-time high, right? Maybe something that does this over that level here gets interesting. So primary focus should be low of day. Secondary focus, I would say, is really up here. Neutral through this, not really giving us a whole lot. I think that this is a better area for a break in the upward direction to get to 410 in the first place. All right, so 406.25, we'll just round down there on 399. 399 is your SPY level, okay? 399, 406.25. QQQ. Ape man, don't call me daddy. That's just weird, man. It's a YouTube chat. I get it. You're going to get some people that do whatever they want to do, but, generally not appreciated. QQQ, same idea. Prior low of day is the inflection point, 286 on the downside, right? Breaking down through that brings us through the thin structure, much closer to 283. So a 3-point move available on your downside look there. Here's your low, 286 on the downside. Remember that we just discussed here is the equivalent of the NQ breakout level. So again, I would want to be patient for that. It's going to be around 293.15, 294 if you want the ultimate clearance of the top of the range once again. That would be bullish getting back out of that in the upward direction. So interested around there. I think playing around in this area gets kind of sloppy, especially ahead of the 2 p.m. announcement. I think the market probably holds its breath and says, we're not going to do anything all that impressive before Jerome Powell potentially comes out and wipes the screens clean with either a big up move or a big down move at 2 p.m. It's just not worth, positioning aggressively here ahead of time. So that's the cues. Again, primary focus would just be, if I had to sum it up with one level, 286 on the downside for a breakdown. IWM. What do we see? As we just pointed out, lower high on the daily. This is your lower high. This is this, of course. Opening close to these lows inside this consolidation range. It's all about 180, 110. 180, 110, 180, 110, 180, 110, right? If we can crack underneath that, definitely, it's very clear the target should be 178.66. That was the CPI gap close from over here. Let's go ahead and make this actually gray because it's no longer a gap area. And it's also the 50 SMA on the daily, all right? So that would be your target. Cracking these lows, cracking this, prior little support, or prior resistance, which offered support yesterday for the dead cat bounce. Boom. More acceptance underneath 180, 110. That's your look. That's exactly what we talked about in the RTY futures as well. Most things we've looked at have cleaner trades to the downside. It doesn't mean, let me be very clear about this one more time, as viewership is, again, maybe at a high point for the stream today. Whenever we have risk reward that is more favorable in a particular direction, in the case of this morning's session, we're talking about downside risk reward being more favorable, it does not necessarily correlate to better odds, probabilities, that is, percentage points of that trade working out. The risk reward may be better, but the probabilities of the trade are not necessarily higher. Because of the overall context of the selling from the prior day's session, I would say that yes, it would seem likely that if momentum just continues in the downward direction, selling would be the natural inclination of the market. But, let me be clear that once again, because we've talked about risk-reward trades on the downside, the probabilities are not necessarily higher because the risk-reward is better. The probabilities are actually higher because of the lower high that we have here, because of the selling momentum that we have here, because of the fact that the overnight range stayed in the bearish distribution. Those are the things that give you a higher probability, higher odds setup as opposed to just referencing that the risk reward is more favorable. With that said, we've kind of wrapped up the broad market. We'll look at our core list now and get moving through today's stream. Apple, big gap close on yesterday's session, continuing to reject this overhead supply, the original balance from here. No support whatsoever at the 146.75. I mean, we went into it, printed a 30-minute hammer. No sort of break or green close over that hammer high, right down through the bottom. Bearish acceptance back down here. So the daily chart of Apple continues to be an absolute train wreck. This is very, very difficult to be trading in this area. I think that continuing to maintain that bearish stance, being underneath the original balance, still holds true. We've closed at the 50 SMA. I would just look for some bearish outcomes here back down underneath 143.50. Really tough chart to be trading. Just like everything else, watch your low of day. Watch your low of day from the prior day's session right here. Right, you can see these upper wicks, buy support coming in, a little bit of demand around that gap close area. If it fails, expect a rotation lower. Right, expect a rotation lower into here. I would start to look at maybe 143. 143, all right? So right here, that's the trade setup in Apple. Breakdown there, that's the range that you want to be going for. Thin structure here, just that would seemingly make sense to me. That would make sense to me. All of these buy demand wicks get absolutely gobbled up. Send it short. Look for the 143 target. Next up is Netflix. What's up with Netflix? Starting to look more like a wedge, right? Starting to look like a wedge. Wedge in Netflix is certainly concerning for downside, right? If this cracks, then you probably go to the, I would expect a rotation through the 303, bringing us lower. Possibly, this kind of gets more attractive here, I would say, this interaction point from here. So 278.75. Yeah, I know. Yeah, I don't necessarily do this for fun. That's for sure. I mean, there is some monetary incentive. I'm just reading the chat out of the corner of my eye. Of course, there's a monetary incentive to put these streams on, of course. Jacob Williams, the better attitude probably would help. You're not wrong. It's just I think just like the market moves in cycles, a trader and I suppose I don't know, is the Trade Brigade a media outlet? Would we go as far as calling ourselves that? I don't know. But we come in waves. We come in cycles, right? And I think right now we've been on a pretty high point throughout 2022, and we might be here in the cycle trying to turn the ship around, trying to avoid the big trough. That'll be a personal goal of mine, to avoid this trough as we move into the coming weeks. All right. Analysis channel, media outlet, I don't know. But all right, so I'm saying it here live on the stream, all right? You guys hold me accountable. My goal is to avoid the trough of the big bad, like, oh no, everything's bad, nothing's good. I'm getting burned out, self-pity, self-wallow, whatever. My goal is to avoid that, all right? So hold me accountable here, chat. That's a mission for the remainder of the year and starting strong in 2023, right? Let's see if we can kick this thing off, reverse the course here. Anyways, in the spirit of that, in the spirit of doing that, and doing that right now, putting my putting my plan in action, right? Netflix, here we go. A little bit more high energy, right? Here we go. Breaking down from that wedge does look bearish. I imagine that the 303 violation is the most important breakdown of the Netflix chart, perhaps, and the range that you would want to look to pick up here would be down towards this 292.50 zone, prior highs. Reason being is that if this trend is going to stay alive, there's the possibility that it could still build out a higher low here from here to there, right? And that would be maybe a little bit more of a weekly acceptance balance range somewhere up here, right? So that's a possibility, but things starting to slow down here in Netflix, that's for sure. It's been the relative strength monster. I'd be patient for that 303, and we're quite far away from it currently, 319, 320 on the open. So I'm not saying it's in play immediately, but something that is just hard to ignore now is this wedge. All right, it's the wedge in Netflix. In terms of looks early on in the day's session, prior low of day isn't really that interesting, right? It's not aligned nicely with this prior open. I think that it's a patience move here in Netflix. I'm not seeing the obvious trade, all right? Anyways, Tesla. What's going on? Tesla. We know that the weekly trend has been lower. We know that the monthly trend has really been lagging as well. The daily trend is clearly down here. Also, Elon Musk seems to be blundering in terms of his management of not necessarily the company, but people's perception. Remember that it's all about perception of how he is, handling the Twitter thing, how he's handling Tesla. Just, consumer discretionary as a sector has been getting absolutely obliterated, and Tesla being the heaviest weighted component of consumer discretionary, that's the XLY, as we've been tracking in the update videos. I mean, XLY has been lagging big time. Down the most yesterday. Tesla down almost 8% on yesterday's session. Just absolutely horrendous, right? We've come into that 155 target. Remember that that's coming from the weekly time frame chart. If we look at a weekly chart here, right? Let's look at a weekly chart here. That's where it's coming from. That's 155, all right? That's the weekly 200 SMA. We're here. If Tesla's going to make a turnaround, this is like where it wants to happen. If we don't get the 155 turnaround, then goodness, we're probably coming much lower to like 115. What's the number in here? The rotation to the next bottom end of the range is closer to 112. 112 from the weekly chart. Notice that this is where we consolidate and get price acceptance. If we don't hold the top of the range and we just fall into this, there's no guarantee that we don't go to 112, right? That seems like a reasonable place where Tesla could head. So really, really not a great looking chart, especially when we consider on the weekly time frame the head and shoulders type pattern here. If this is the neckline, right? If this is the rough neckline of the pattern and you take your head to neckline, right? Doubling that range, really ugly for Tesla. I mean, I don't want to reference Tesla going to zero. I'm not saying it will go to zero, but from a measured move perspective on the pattern, we're talking about like $5, $5 Tesla. I don't think it's going there. Let me be clear about that. I don't think Tesla goes to $5. I think that, just the technology that the company has produced, the technology that is being developed here means the stock probably won't go. I mean, I don't know. You never want to speak in absolutes, but I would say the stock probably doesn't want to go anywhere underneath 50 based on this prior high. I mean, things might get wishy-washy. If 100 goes, you probably get a big wave of investors bailing on this thing. But I imagine that there's going to be some sort of support based on just a fundamental valuation of the company closer to 50. All right. And that's just coming from support. I don't know. Again, I'm not doing the math. I'm not doing the fundamentals. Just speaking from a technical perspective, if this thing goes to hell in a handbasket, maybe there's something that holds it around 50. All right, just trying to balance out the extreme negativity we just brought to Tesla with the doubling of the head and shoulders range, bringing us to zero. Don't think that's in play. Let me be clear about that. In the meantime, though, in terms of what we've got on today's session, I think that this is a dangerous place for Tesla to be trading as a bear flag. We know that the failure of 155 certainly opens the door for another big push in the downward direction. It seems that we're only breaking down from this as a bear flag here. If we take a measured move from that, we're probably moving closer to like the 145 area. 145 area in Tesla. So if we get the break of 155 today, if we see continued selling pressure, 145 could be your target. Overall, remember that you don't want to be chasing things, so make sure that you've got a tight intraday setup with a stop loss over 155 somewhere if you're going to take this trade. And again, at 2 p.m., if Jerome Powell comes out and says, hey, not only are we going to only hike rates 50 basis points, but we're actually going to give Tesla a grant for, $3 billion to continue to incentivize tax, whatever, this, that, the other thing. Boom. Right? Again, totally theoretical. I'm not saying that will happen. The chances of that happening are close to zero in terms of Jerome Powell specifically referencing a publicly traded company in his press conference. The chances of that are quite literally zero, right? It's not going to happen like that. I'm saying keep an open mind depending on other insinuations from the FOMC press conference. Things look bearish on Tesla daily, weekly, so we'll leave it off at that. All right, we've spent enough time on Tesla. Let's move along here and talk about Google. All right, losing market due to competition. I don't know about that, May. I think that Tesla is far, far ahead in the EV space, especially when it comes to automation. I think it's far ahead. Not only their production, or maybe I shouldn't say production, but the way that they handle the automation is far superior to that of their competitors. So I don't know. I don't know necessarily that it's about losing competition. I mean, if you look around, if I just look around where I live, right, the primary EVs that I see floating around out here are Teslas. They're not Priuses anymore. They're not some Lucid, right? They're not Rivians, right? Don't get me wrong, Ford, right? I have seen a couple of the Lightnings. I've seen a couple of the, what do they call those things? The Nissan Leaf, which I hate the look of that car, but Nissan Leafs out there. I've seen some of the more, popular and standard sort of EVs, but in terms of the purely EV companies, Tesla's still kind of taking the bet there, I would say. Anyways, Google, what's going on here? Really bearish look, failing to get back outside of the range on the upside, 98.55, producing a rejection on yesterday's session, closing down towards the bottom of the range, not really doing a whole lot here in the pre-market. So stuck in the balance, just like we talked about in the broad market, right? This is accepting in the bearish distribution from yesterday. I would favor downside outcomes. I would want to see a break in lower high underneath 94.64 at the bottom of the balance here to continue to close the CPI gap. This did not close the gap all the way. We know that the XLC for communications had some relative strength yesterday. So the main focus here would be, okay, opening drive lower, either a flag and then a breakdown of 94.64, or if it just goes in one fell swoop. You're watching for the lower high anywhere underneath and then target the gap close with tight risk, right? So Google, rather, this is the trade setup that I would look for. A rough 2.5, maybe 2 to 1 risk reward ratio, right? So that's kind of the favorite outcome. If we do just chop around through here, I think it's a hold your breath. Market's not really doing anything impressive in the midpoint of the range ahead of the FOMC at 2 p.m., right? That's Google. Meta, Zuckerberg in the fantasy land. What's going on over here? Recapture the daily 50 SMA, right? Back above this as well. Holding, right? Holding, big gap. This did not fill like everything else did on yesterday's sell side session. Notice that it chugs around, it grinds around, higher, lower, a little higher, a little lower, higher into the close, sideways here. It's definitely opening in the lower distribution, or right on the edge of the lower distribution from yesterday. So if we reject off of like 120, we'll call it for round numbers sake, underneath 120, a little bit more of a bearish edge, and I would look for that gap to possibly close underneath as the trade to identify. That's under 118.50. Under 118.50 closes the gap down towards the prior high, 115.75. So that's a reasonable trade range to be looking for. That's the risk-reward perspective chopping around through here. It's exactly that. It's chop. Look at how, in the face of a sell-off market, Meta in the Zuckerberg fantasy land was actually able to go sideways and hold up. So I wouldn't be aggressive with new money shorts until we get sort of that look here, like we talked about in Google, confirm with the lower high. And for longs, right, you just want to clear all of this chop. And the next overhead look is through the gap over 124. 124 inside of Meta, right? 124 unlocks your upside. All right, continuing along, NVIDIA. What's going on with chips? Not Lay's chips, not Frito-Lay, not Utz. Utz or Oots? Let me know in the chat. If you think it's Oots, put an O-O-T-Z. If you think it's Utz, U-T-Z. Oots, Utz. Oots, Utz. Which one is it? Age-old debate. Which one is it? Anyways, NVIDIA, right? What do we see here? Opening in the lower distribution, just like everything else. Holding some of the gap up. In terms of the prior low of day, it's at 178.50 where the support really came in. So if we hold that, right, that continues to look bullish here on the break of this flag. All right, so NVIDIA is not a short, even if we crack the low of day, in my opinion, because we're breaking out of the bull flag on the daily. Measured move takes us much higher, close to like 200, breaking out of this flag here, right? So closer to 200 on the measured move. I wouldn't be looking for short opportunities in NVIDIA. It's one of the stronger names on the board, especially holding this gap, holding the break of the range. Looks good. So I wouldn't favor shorts here. I would be patient and wait for the next long setup in NVIDIA. Nothing obvious on the open. Again, we are opening in this lower third. If you're a really aggressive short trader, you want to scalp this lower, maybe. But again, to me, doesn't make sense to do that in the face of a daily chart that looks like this. Next up, Microsoft. What's going on with Softy? Same idea. Clearance of all of those levels we were concerned about, 250, 247. Holding up with the lower wick producing a bounce that closed above technically 256. This is a bullish look on the chart here. So like NVIDIA, I would probably avoid big shorts in Microsoft. As long as we're above 256, we're consolidating above this prior high set here. Didn't really give us a clean setup for longs. Remember that the ideal trade would have been breaking this pressure cooker top from the bottom up, offering a breakout trade along there. Didn't happen. Of course, we gapped over it yesterday, faded. So now the opportunity is, can we continue to produce higher lows around 256 and then put in some sort of bullish setup on the daily to get back up towards these highs here? So patience, looking for the long in Microsoft. Structure looks good. Amazon, last but not least, the mini beast. What's going on with Amazon and Bezos, who's not Bezos CEO anymore, but big shareholder, right? Continuing to be one of the world's richest men, so to speak, in terms of stock valuation. Amazon, lower highs, possible lower highs here. Big upper wick rejecting anyways, the 97 resistance that we had from the top of this balance range here. Closing, I don't want to say weak, really more towards the midpoint of maybe, the upper wick's a bit deceiving here, but if we look at where the bulk of the day's action was spent, closing towards the midpoint of that overnight range is just doing nothing as well. Strikes me as a patience play ahead of the FOMC. Like, we don't really want to do a whole lot in Amazon here ahead of the announcement. Think about this as a range. Think about where we're opening, roughly right here, right towards that close. Midpoint, ugly. Nothing to be done. Don't have an edge here. Edge is at 97. Edge is at 90.57 for the rebreak in the downward direction. So patience is the play in Amazon, not seeing anything obvious. All right, we've got about 8 minutes to go until the open. We're not going to stay right up until the open, but we'll hang out for a second here. And what does the chat want to look at? So I'll leave it open for maybe the next 3 minutes or so to get my mojo back, to be feeling good about streaming and the whole YouTube thing right now. Let's just remind ourselves that we got a great community here on the stream, everybody in the chat. And, to sort of, I don't want to call it paying it forward, because I don't know that this is just paying it forward, but, what does the chat want to look at for the next, 5-ish minutes or so? How can we keep things going here on a good note, and how can we interact with the chat and support the community here and do what you guys want to see? So I'm going to end the official poll. It just flipped. Actually, I'll leave it open, because the official poll, the one that you can click on in YouTube, it just went 33% on the bear outcomes for this morning session. Unfortunate to see. Tony Price, UTZ sucks regardless. I thought that their chips were fantastic. Better than Lay's. Lay's are far too salty. If you go and get some UTZ Ridges potato chips, by far favorite chip out there. Barring, shall I say, the what do you call those things? The blue corn chip things, the like nacho looking chips. Blue corn chips are cool. All right. Cape Cod chips are the best. I take it back, Tony. Maybe we've got an equal playing field with Cape Cods and then the UTZ Ridges over here, right? So maybe that's that, all right? All right, chat. Any ideas on Pinterest? Let's take a look at pins. Not yeah, we need an N in there. Pins. Any ideas on Pinterest? Pinterest, really bullish yesterday. Look at that. Holding the gap. Interesting stuff. I don't know if there was some fundamental news that came out about Pinterest. Of course, what you want to see in Pinterest is a break and close, which started to happen above this 26-ish zone. The pullback was quite nice as well, respecting that here. I would want to see this on an hourly chart. Let's go to this grid. And we'll have to retype in pins. Interesting look here. Breaking out of this balance. Hourly chart, kind of looking good. This would be the level. 26.25 closed above. You've got some clearance here. In Pinterest. Another noteworthy thing is, remember that contraction leads to expansion. If this is going to break out and be a true break, you're looking at 31 as a possible measured move target in Pinterest. You need to continue to see the momentum. Yesterday was a really good step in the right direction. So first step complete. Now you just want to see continued momentum. This gap could have been the thing to change the tone here in Pinterest. So ideally, right, going forward into the remainder of this week and the remainder of this month, holding above just anywhere over the yesterday's opening print, 25.29, is bullish, right? Because we're holding this gap. We're clearly indicating that buyers are making a stand and in control here, watching for that continued break. If we just get continued momentum higher first, so say today's daily bar does this, then great. Any pullbacks now need to hold over 26. So 26, kind of the pullback area to hold if Pinterest continues here. All right, so chart looks great. And remember, compression leads to expansion. 31 could be on the table. What's up with BA and mRNA? Yep, for INF. So BA, oops, I'm not sure why that square bracket went in. BA was real interesting because we had the double inverted hammer, never got close to breaking the lows on the Monday session gap close yesterday. What's going on in the pre-market here? I've got to just do this. So we've got our setting available. Oh, it was there. Good. In the pre-market, where are we opening in BA? Just like everything else, kind of neutral towards these lows. Remember that they got a huge order from, I thought it was Delta for the Dreamliners. And that's going to, of course, be bullish from a fundamental perspective here. I don't know if that's kind of, someone knew something behind the scenes for this run, of course. But, so far, the fact that it didn't break these inverted hammer lows, really solid. Really solid. I was concerned about the look above and fail, right? Fail here, especially after a lower high. Not the case. So a little bit more bullish than we expected. And again, continued holds of 186. Prior top from right here. Look good. Look good for continuation higher. right? Gap fill reversal, not threatening the breakdown. For bears got to see the break of 177.77. All right, so cracking those lows is the interest point for the sellers, but currently far, far away from that. All right, what else? mRNA, there we go, was the other one, right? Really, really interesting break yesterday, of course, on some fundamental news about development of some drug and what have you. Let's go ahead and toggle our extended hours and see where the intraday pullback was. So we did close underneath what we wanted to see, just roughly throwing some levels on the chart there. And we'll go back with our extended hours and see where we're opening in relation. So underneath both of them. So flag consolidation did not hold. I'd be cautious in mRNA because that flag consolidation didn't hold. We've got thin structure through the breakout rally here. Be cautious. Be cautious in chasing longs mRNA. I would want to see a higher low back above, let's call it 200. 200 is the level in mRNA. Higher low back above 200 gets more interesting back for upside. Any rejections off of it for a lower high, you guys know the deal. Longs late to the party from this upper wick. Look at your daily chart, that upper wick. Those folks massively disappointed. If you're late to the party expecting continuation and we put in a lower high underneath 200, painful. Painful, painful, painful. Maybe those folks will close out as overhead supply and add into the selling pressure off of that back test. Something to consider. So anyways, 200 is the inflection point in the mRNA chart. What else? Would we check out CL futures for INZA? Yes, we can. /CL. CL futures, daily time frame chart. Just as a reminder, for anyone who trades the oil futures, this does not move like the ES. If you look at the ES, and this is really any market index, this year is different, of course, but let's look at a really, what's up with that? Really long time horizon. Generally, market indexes have more bullish days than bearish days. If you look at the /CL, generally, the CL is much more all over the place. Now, granted, yes, this is more bullish than bearish, but let's look at even more time. And I suppose that in the longer time frame, this is really what I wanted to illustrate. Higher, lower, higher, lower, higher. Like, look at the volatility, right? If you do something and look at the same time frame on the ES, what we'll see is just a straight shot higher. Okay, so that's just your constant reminder in the CL to always be more flexible than, say, an ES trader. In terms of we want 30-minute zoom in over here, and then we're going to kind of wrap it up about a minute before the open. I like to settle in a little bit these days. CL before the open here. We're going to go with a 15-minute time frame chart on the right. Gapping up. Gap rules in play. Gap rules in play. Watch for the pullback to 76.40. Remember that the ticks here are far different. That's going to be a large trade on the downswing if it unfolds that way. CL on the down move, a little bit of an undercut. 76.30 maybe. 76.30 would be my target here on the open for a pullback. If we hold it, that's where you want to look for the gap fill reversal in the CL. All right, and is that technically open already? I know there's different hours. Yeah, this opened at 9, so the move was from 9 to here. When the 9:30 cash open happens for the futures and just regular market equities, you might see a little bit of an uptick in oil, just because that's usually when more participants are coming to the desk. Might be wrong about that, but usually at 9:30, where's the 9:30 bar? See here? We get a little bit more of a meaningful open. All right, so I'm not an oils trader. There's the bell anyway, so what the heck? I guess we'll stay on first 5 minutes. This is not my specialty, but I would imagine that this is an area of interest on a pullback here from the open. That's at least what I would be looking at if I was trading this, but I'm not. So, take that with a grain of salt. All right. Let's first of all wish everybody a green trading day. If you're still tuned in, let's go on over to those ES futures, see what's going on over here on the open. Nothing all that impressive. We know that we were opening in the value area. We know that we were opening in the prior day's range. We know that patience was the play on the open. No knee-jerk reactions. No big move over the prior high of day under the prior low of day. We are recognizing that more bearish outcomes are favorable underneath that 40.25 level down here. Opens the door for shorts, right? Currently just kind of neutral on the open. Not really pushing a big opening drive either. I mean, considering the market volatility that we've been experiencing here, on the prior day's session, fairly muted on the open so far. It's not like we saw a flurry of orders on the open here, which is pretty telling. Pretty telling. All right. Let's see what the internals opened like. One of the things that we pointed out in yesterday's video in the nighttime. In the nighttime, what am I saying? The nightly recap video from last night was that our advanced decline line, perhaps up here, most importantly, did not stay overcorrelated. That was not a concern for buyers. Currently opening here around the zero line. So not really, not as bullish or bearish as anyone may be telling you. In the face of all this volatility, this is fairly neutral read. Neutral read. Ticks opened right around that zero line as well, neutral. And breaths on the open are divergent and one handles on the reads. So this is telling us patience. This is telling us patience, not a whole lot of quote unquote gas in the tank to be producing large market reaction type moves here on the open. So patience, sideways, not doing anything here. That is the play. Sit on your hands. We'll take a look at our Tesla. And let's reset this here, actually. We'll go with a 5-minute chart and go back to Tesla. Lots of chart changes, I know. Tesla, inverted hammer starting to form on the first 5-minute bar. Again, probably want to be patient for the better short outcome. You could have looked at this as a head and shoulders pattern break of that 162 is interesting for today's session. Not currently in play, but just, something to be mindful of. Currently getting more acceptance under the 160 handle on an inverted hammer. Strikes me as more bearish than bullish. Remember that the daily chart is breaking down from this range right here. 155 was the target, so you could continue to look for moves into that on today's session. If it does move higher, again, this is a scalp. Break of 162 on the upside is just a scalp. Personally, wouldn't really be in love with it. Would rather reposition for a short on the back test of 170. The breakdown point, right? 170. What is the ES doing? Pushing a little bit higher here, but still not a whole lot of market momentum. Really, I don't want to. It's not lackluster because we weren't expecting anything large. We weren't expecting anything large here, so I wouldn't want to classify it as lackluster if the expectation was exactly for this kind of a patience grindy type move on the open, not really offering a lot in terms of momentum and probabilities. Taking a look at the Qs, just Qs and SPY in relationship to one another. QQQ driving a little bit higher. SPY a little bit more interesting around this point here. Remember that this is kind of a zone to get into that middle distribution. Remember, the middle distribution is really just more neutral. If we reject off of this, right, for the move back to the point of control, then we know the deal. It's kind of killed ahead of the FOMC, or possibly that's on the table. But if we just get wrapped up around that point of control, let's call it 401 in the SPY. 401 in the SPY kind of kills anything going on if we just get wrapped up here and go sideways around it. So current look is the possible break to the upside into the neutral part of the range, but it's exactly that. It's just neutral if we go there. Let's go back to the IWM and see what's going on with IWM small caps just to check in and see where we're at from the bottom of the range perspective. So no definitive break right out of the gates. That's the 181.10 level. 181.10 is the number. So holding it so far on the open here. It's a better sign. It's not as bearish as it could be. If it was just opening drive lower here, lower high under 181.10, that's concerning, obviously, for especially longs or at least neutral outcomes in the broad market elsewhere. So this strikes me as neutral. Everything's neutral so far. Are the internals improving? Not really. Breaths have gone to in sync. Slight positive. Oh, there's a yawn. Again, I need that cup of coffee. There's a slight positive improvement from that perspective. I would say that the advanced decline line going through the zero line is not impressive, but again, more of an indication of neutrality. Makes sense. Ticks kind of hovering around the zero line, not aggressively moving here or here on the open, is exactly that as well. Really, really a neutral open. And look at that, your breath back to divergent up here, really just flirting right on the level. It's not the zero line, it's the ratio, of course, of up versus down. But you get the idea that this is really, really not telling us anything impressive about what direction volumes are flowing into the market via up and down. Let's go back to that SPY and look at that level on the 5. So possible 3-bar play here. If you crack this top, you could see some lift in the SPY over 403. You could see some lift in the SPY over 403. Carry that forward. So scalpers out there, people who want to long some futures, a break of that might get interesting for it to pick up a couple points. But again, remember that we're just moving neutrally into this overhead, midpoint of the range. So I wouldn't be married to bull outcomes here. A pullback off of this area that takes out VWAP and again goes to the open. Bearish neutral down here, wrapped up around the point of control 401. Nah, not interested, right? So, it's kind of it's a patience play. That's really what we've got for you on the open here, and that's basically the summary of last night's video as well. It's a patience play from a larger time frame perspective in the midpoint of this range. Again, scalps maybe over this high here, 403. I'd watch 403. It looks like it's about to go right now as I'm talking to you. So that's an area of interest. We've still got, what is it? 3 minutes to go. 3 minutes to go until the 5-minute close of this bar right here. It doesn't really look like it's going to offer that inside bar, 3-bar place setup anymore. It's just bullish and breaking sooner rather than later. Continue to watch that though. 403, this inflection point right here. Right, that's kind of that's the setup I could recognize at least off the open. If it grows, quick scalp, maybe again 2-3 points. ES futures, you could take that trade. But back to the internal screen, still neutral over here. Tick's getting a little bit positive. That's a step in the right direction for the breakout type trade. This getting a little more firm in the positive direction with that 1.1 instead of like 1.05. I saw it at one point. So there it goes. Are we through? Nope, not quite yet, but certainly threatening that move, right? Again, 2 to 3 ES points could be on the table there for a break. You could take that if you're interested, but I think I'm going to wrap it up at that. I want to say thank you to everybody who's tuned in past the 5-minute open. Yeah. Thank you to you guys. Appreciate you guys being here. All right. That's someone's saying check NVIDIA. You can look at NVIDIA real quick before we head out. NVIDIA, the same idea as the SPY, right? Just kind of neutral around this, pulling back a little bit more aggressively than the SPY. Let's look at the SPY, actually, 403. Yeah, it's still pulling back here. So, didn't really offer us the 3-to-1 or the 3-bar play even either. So patience, but all right, that's truly going to do it. In the spirit of high spirits, what we're doing is tomorrow we're coming in, we're hitting it hard. We're on this little possibly decline. We want to do this. We want to change the trajectory. We've got the power to do so, right? It's all about taking charge and making sure you don't go here. So again, I know the 400 of you that are left in the stream, you guys are the, for lack of a better term, ride or dies. You guys are here through the thick and thin. It's up to you guys to hold me accountable and for me to hold myself accountable, really, because at the end of the day, I'm my own person and we can make it happen. All right, we're going to avoid the trough. We're going to bounce back hard. We're going to give you guys the update in the afternoon video today, and we're going to move forward. We're going to keep doing this thing, right? There may be ups and downs, but hopefully the downs are muted. And just like the equity curve in our account balances, we see very limited drawdown. There's peaks and troughs, but we continue to push on, and we get bigger and better with time. So with that said, thank you to the 400 true dedicated folks. For those of you who are new, because I see that Darlock just joined today. Great stuff. Appreciate you being here. Check out the Discord if you're not in there already. It's a great place to come hang out with us and just discuss markets in general. I usually send some ideas. Endorphins work out. Funny enough, RB. So funny enough, RB, I missed the gym last night. I was derailed from my normal routine, trying to produce the video last night for the CPI update. I missed the gym last night. Does that have anything to do with possibly being in a slump this morning? Maybe. To me, and I, not to go on a gym rant or this, that, the other thing, but the gym to me is like it's a sacred place, right? You go in there, you get all this energy out, you hopefully get stronger, you treat it like trading, you track your progress, you're very methodical about it, you hope to get better over the long course of time, right? You're tracking your lifts, for you guys who are in the gym, you guys know this. If you're trying to increase your strength, you actually have to implement a strategy to gain strength. You can't just go into the gym and lift the same thing every time and expect to be getting stronger. You've got to implement a strategy. There are very, very many parallels between lifting and trading, right? A lot of parallels between the two. self-discipline, strategy, consistency, being persistent, not getting discouraged, right? There are drawbacks in training. There are drawbacks in trading. All right, so not to go on the gym rant, but I missed the gym yesterday. Is that maybe why I'm off my game? Maybe. All right. So, yeah, progressive overload. Exactly. Joel Clark knows exactly what we're talking about. Joel Clark was a professional power lifter. Of course he knows about strategy, right? Yes. All right. Anyways, I'm done here. You guys know you know my deal. I'm patient here on the open. I'm probably wait till 2. I'm wait to see how this day resolves. My favorite outcome, right, does not look to be coming into play, which was downside under the prior low of day. That's kind of the outcome I was willing to trade. Doing something like this through here, not one of the favorite outcomes that we were talking about pre-market. So with internals that are lackluster and mixed, this is really neutral. This is really neutral. You know, nothing about this is making me like jump off my chair and say, oh, I've got to go long, got to smack it long. You know, we're all in here. Second mortgage on the house, dump it into the account, finance, you know, the whole thing. You know, not the case. Not the case. Final thoughts on mRNA. I'll do it. I'll do it because today's about giving back to the chat and lifting up out of this slump. We did not reject off the 200, moved right through it. So now it's a higher low pullback above, keeps you bullish. Watch for the higher low pullbacks anywhere above the VWAP, anywhere above 200 in mRNA. That's what I would say. Needs to produce a setup down there, right? Needs to put in some sort of double bottom, some sort of hammer candle, and then do the deal, something like this. But, you know, watching for pullbacks to VWAP, which is at now actually here, or watching for pullbacks over 200 in mRNA, right? Continuation. So, nice. All right, Todd Scholes, congrats. Already got your scalp for the day in. Congrats. Wishing you a green and relaxing, really, rest of the day. So, you know, good on you. All right, that's truly going to do it. Thanks for tuning in, guys. Join us in the Discord if you're not in there already to come hang out and discuss things all market. And with that, wish you all a green trading day.